Welcome back. We are still live here at the KPMG Insight Center. It is, of course, the 2025 budget day. There's been so much already being discussed. We've heard from we had the breakdown of the budget. We've had the discussion with the Minister of Budget and Economic Planning. We've had the private sector response. We've talked healthcare. Ladies and gentlemen, it's time for taxes. Oh yeah, it's another big one. The need for reform. Just to set the scene here. We've got the Nigeria tax bill, we've got the tax administration bill, the Nigeria Revenue Service bill, the Joint Revenue Boards bill. The administration, as you know, everything, everywhere, all at once with reforms. I've got three big guests here. Very much looking forward to talking to them. We have, of course, Mr. Taiwo Oyedele, Chair of the Presidential Committee on Fiscal Policy and Tax Reform. We've got Rasheedat Adebisi, Executive Director, Chief Commercial Officer, CCO at AXA Mansard, big in the insurance field. And last, certainly not least, Mr. Ajibola Olomola, Partner, Tax, Regulatory and People Services at KPMG West Africa. You are all very welcome. I have to start with you, sir, of course.
Professor.
Because I've watched all your presentations, your different interviews on the Arise Channel and elsewhere. Nigeria's investments comparative advantage, right? Taxes are not the only thing that companies look at when they want to pick a country to invest in. So this reform bill, how does it impact Nigeria's investments, comparative advantage, when you think about the pioneer tax status and also free trade zones? How does that all come together?
Yeah, thank you very much. I think the starting point will be that the investment climate that we have now today within the tax and more broadly the fiscal system is not conducive for growth. So which means we have to fix that. Despite the incentives, pioneer status, free zone, tax credits, it's not enough. So therefore, if we take a step back and we say, how can we address those issues in a structural manner rather than throwing incentives at people, which often will not solve the problem? How can you make it a system-driven solution that is sustainable? So in that regard, one of the major objectives of the reforms is addressing economic distortions. Another one is promoting competitiveness. So if you think about the free zone, we looked around the world, and most countries will set up a free trade zone or area with a view to promoting exports, right? You relax the rules around tariffs and taxes and regulations and exchange controls. Just do your stuff and export. So in Africa, a country like Morocco, which set up their own after us, are now talking in $30 billion plus in exports. Nigeria cannot boast of $5-6 billion non-oil exports. In fact, non-oil export as a percentage of total exports is less today than it was when we introduced the free zones. That's one important point. The second point is there are companies within the domestic market, we call it the customs territory. They are tax paying. So if we allow the people in the free zone to sell to the customs territory without paying taxes, what you're simply doing is you're making it impossible for those tax-paying entities to continue to operate and continue in business. So we thought as part of the reform, we must create a level playing field such that if you operate in the zone, that's fine, feel free to export, and whatever you do within the zone, no taxes. But the moment you are selling to the customs territory, the domestic markets, you need to pay equivalent taxes that the people operating in the zone, in the domestic market, are paying. That's just fair play. And those provisions are actually today supported by the provisions of the law. So it's actually, we are not changing the rules. So we looked at Ghana, we looked at Benin Republic as part of what we investigated. In Ghana, even when you're exporting, you're exempted for up to 10 years. After that, you pay corporate tax even on your exports. You sell to the domestic market today, you pay corporate tax on it. In Benin Republic, that is very close to us, they allow you for 15 years, no taxes. After that, even on your exports, you pay corporate tax as well. So even after our reform, Nigeria will still be more competitive than our neighboring countries and most countries around the world. Pioneer status is an incentive that says you can operate, not pay income tax for up to 5 years, And we see a lot of abuse. Some people will get the incentive and then they start importing and they're not paying taxes. So what we've done now is we've introduced what we call priority sector incentive. You get a tax credit based on your investment that will be validated. So this is now to try and ensure that, one, we're not wasting our limited resources by just giving away incentives. And two, which is even more important, is not to create an economic distortion as a result of your incentives. So those are the things we're trying to address as part of the reforms.
Fantastic. Rashid, let me come to you. The requirement for companies to pay an effective minimum tax of about 15% of profit before tax. Some suggest that that could negatively impact insurance companies because your, where you pay that from is not, your taxes are not necessarily derived from your PBT, right? So, what's your view on how that could be amended?
Yeah, I think first is to commend the committee and our professor of tax on all the work that's been done. I think we haven't had this level of engagement in many years. Of course, after then delivering on the policy, the question is how do we ensure that we're not using one paintbrush for everyone?
Right.
So there are technical areas of the industry. The profitability in life insurance is quite different from what you have in other businesses. Why? We have to keep a lot of reserves away. And when the taxman is trying to recalculate, they want to add back all the things that they don't understand. But realistically, we pay debt claims. We have to put away money for long-term risk, annuity, which means that we don't know if the person will survive 30, 40, 50 years, but we have to assume you'll be here for 60 extra years. So imagine if all of that is being then put to a compulsory tax of 15% just because we want to do that for every company. That, of course, could also affect companies that are also startups. So we believe that 15% is fair. We're not fighting that. We're saying, let's adapt it to different sectors. Let's understand the technicality of our sectors. Let's take away things. The existing law has been amended over time, supported by people like KPMG and, of course, Taiwo in the past, where we have, we look at investment income. We back out expenses. And even in many instances, we're actually booking losses when you look at it tactically, because it's a long-term play. We're meant to be investing for the future. And because we are the safety net of the industries that we all want to encourage to grow, it's very important that we put in the right processes so that we actually attract more investments. And the industry and our regulator, we're actually working together to try and deepen the sector because, insurance penetration is another debate. So if we throw these taxes at us, then we're actually being discouraged to actually go out and run. So I think the focus is to support the sector, to make sure we run so that we can be the true safety net. Every time it's always the government giving people money when things go wrong. The job is that of the insurance company. So we need to make that behavior change happen. So we believe with the right tax support and making sure that it's ingrained there so people don't interpret it as they wish, because uncertainty has been a big challenge for us.
And just to give the good news is that it's always good to engage. So there's partly the trust issue in the system because the issue that they have raised, which is valid, but it's only valid because of our context. Somebody will take the law and read it the way that it's convenient for them because they have the powers to force it to pay taxes. So trying to put that clarification in the law is actually good so everybody can go to sleep and focus on doing their business. So the bills are no longer within our power, it's with the lawmakers, but we have now proposed to them to consider amending the law to include a language that states specifically that this is profit that is to do with their own investment as a business and not the investment of their policy holders. So we are positive that that would succeed. If it doesn't, we have a plan B, which is that once the laws are enacted, we can then work on a regulation that says this provision of the law, this is how it will be implemented. And we can then provide that clarification there. So I think you have nothing to worry about.
Very exciting news for myself and the industry. Now let's see it happen.
Fantastic. KPMG bringing the private public sector together and working out taxes right here live on our eyes. Fantastic. A solution. That's what it's all about. Ajero, let me come to you. The matter of the amount of agents collecting taxes. The bill, of course, looks to reduce that. Not just at the corporate level, but also for SMEs as well. I feel like Taiwo can jump in on any of these questions. But can you speak towards the importance of that, of reducing those agents?
Absolutely. So firstly, I'd like to, of course, commend Taiwo for the very quick response to Rashidat's commentary. And it just gives confidence and trust, like he said, that if you engage with the authorities, they are sensitive enough to recalibrate. And the issue of harmonization of tax collection points is one that has been critical to the Fiscal Reform Committee. In fact, it has been a recurrent issue. But in this iteration of the bill that's been put forward, there's been an initial attempt to harmonize collection points. If you think through the complaints people have had around multiplicity of taxes, and also the habit that we have in passing legislation to earmark. So you have Nigeria Police Fund, earmark that to a certain tax base. You have the Tertiary Education Fund, earmark that. So we love earmark taxes. So what the committee has proposed and what the tax bills show is a reduction of that, aggregate all earmarks into a single 4% development levy, and then taper that down between today and 2030 to ultimately arrive at, say, 2% of total earmark taxes. That will be a profound achievement, and it's the direction of travel that's to be commended. So again, credit to them for coming up with that idea, and I hope it survives the legislative review that's ongoing. The question, of course, will be how do you ensure that future legislatures do not feel the need to create new earmarks,
Right.
you know? And of course, that has to be a continuing conversation, and that's at the federal level. Now, the greatest problem of multiplicity is at the state and local government level, as Taiwo himself has had cause to say on national TV a few times. And for that, they've proposed to, if you like, reimagine the Joint Tax Board and also a platform for dialogue and cooperation among states. We've seen that happen in other countries. In Germany, for example, there's a framework for the states to collaborate and adhere to federal guidelines around taxation. We've seen that also in the US, even on things like what we call VAT and what they call sales tax. There's a uniform model that states have to adhere to, and then states pass individual laws. So for JTB, I hope that some kind of guidance will start to come around what states can do. So for example, you don't want to be paying, if you have to travel between here and Abuja and crisscross 5 states, you don't want to be paying radio license in every state to pass through. So if you paid it once in one state, will other states give you a pass? Ideas like that can begin to come through. So in other words, the job that the committee is doing is not yet completed. They've taken a first stab at it, and we like the direction they've showed us, and we will encourage them to stay committed till they get to the final line. Because that's where, especially the manufacturing sector, if you think about the guys who are producing in their factories, all sort of goods that are then moved across the country, that multiplicity is killing them right now. And that has to be harmonized.
Yeah, indeed. So we are committed to that process. And I can also say Mr. President himself is committed, as we have seen, because it takes that level of leadership to say we need the reforms. We can talk about tweaking it, but let's not negotiate whether we need to reform the system or not. And Jibola is right. So we have the multiplicity of laws imposing different taxes and requirements. You have multiplicity of taxes and levies, and then you have multiplicity of agencies collecting those levies. In some cases, we have legal taxes, i.e. they are legitimate, but they are collected illegally. And then, of course, you have so many illegal taxes that are collected by states and non-state actors. So it's a big issue. But if we take a step back again and you say, what's the incentive for this? The incentive is there's a lot of leakages, and then it creates the opportunity for corruption. So most of the guys that you see on the road stopping vehicles 1,001 times are not doing it because they love to collect revenue for the government. That's why people pay so much taxes, but the revenue government collects is so little. So there's a disconnect that we have to address. One of the ways we're addressing that is first, the tax reforms would outlaw cash payment for any tax or levy whatsoever. In other words, any tax or levy you cannot pay using USSD or bank transfer or bank card, right? If you do not have a phone and you do not have a bank account, you should not be paying any tax. So that takes away the incentive to collect that money and divert it. That's step one. Another important reform factor is the tax ombudsman. The reason why somebody will stop you in the middle of nowhere and make you pay is because they have more powers than you. They have the powers of the state that they're misusing against you. So the logical and commonsensical thing to do is pay and move on and then complain after all. But once you get to your destination, you're bringing yam from the north to the south, and you have to pay 500, 700K, more than 50 stops, you're going to add it to the price of yam. That's why even the urban inflation versus the rural inflation for food is more than 400 basis points. So that explains it. It's not all diesel and bad road. So with the ombudsman, you don't need to speak Queen's English. You don't even need to speak English at all. Yeah, you have a number you can call, you can text, you can write, and then the power of the state is now here to defend you. That's another important point. But the other one is, since I said we have many laws, we're trying to harmonize the laws. We have many taxes, we're trying to harmonize the taxes. Maybe there are just few taxes. The confusion will be eliminated such that I know the taxes I need to pay. There are one or two, and I've paid them already, and I can show you on my phone. Jibola is right. This should be a marathon. It's not something that will happen overnight. What we're starting with now is a legal framework, but we know we have to work together collaboratively to get this to happen. It has to happen for the sake of our country. We're very optimistic and we're committed.
Fantastic. I'll stick with you. So we've got this, and you talk about this a lot right here, and this was, the breakdown. Our rates, low tax rate compared to peers, right? Nigeria compared to South Africa, Kenya, and so on. The widening of the tax net, in order to maybe bring that up. It's been, discussed that if you've got business A and business B, business A, self-identifies, they are subject to audits, visitations, they're out there, they put themselves out there. While business B stays in the dark, doesn't have to. How can we harmonize that?
Excellent point, Rotus. So we have succeeded in creating a system, maybe inadvertently, or it evolved over time, such that today we punish people who are trying to do the right thing, and we create incentives for those who are doing the wrong thing. And whatever you reward in life multiplies, right? So we should not be surprised that we're where we are, but we need to fix that. So how do we fix it? First, if you show up to the taxman, you've now reported yourself. They'll come and audit you again and again and again. There's also the mindset that it's not possible for a taxpayer to be fully compliant. How can I come for an audit and leave you without an additional assessment, right? If they can't find anything, they will stay there. In fact, I had a session before with executives, and this really, hits me very hard. When I was done with these executives, some of them came to me and said, I like your passion about Nigeria, doing the right thing. And he told me he lived all his life in the UK before relocating to Nigeria with that mindset of we need to pay taxes correctly. He was paying taxes correctly. The first audit came. It was from the States. And they stressed the living daylight out of this guy. He eventually agreed to pay a liability that was not due. Guess what he did? He instructed his CFO. He said, from now on, when you finish calculating PAYE, you remit 75% of it. The accountant said, but we're going to pay penalty. He said, I will pay penalty and interest. Don't worry. But at least when they come, they can find the 25% and they can let me be.
Right.
That was, for me, that was hard hitting. Yeah. Because we are damaging the system. What we've tried to do here now is to say, why are we waiting for someone to report themselves so we can audit them? Why don't you connect the intelligence within the system to build a system that tells you what people are doing? We want to get to a point in the next few years where the tax authority will not ask you about your income. They will tell you what your income is, just for you to confirm. So we call it pre-population of tax returns. And it's being done already in Africa. Nothing novel, nothing out of this world. Then the second thing is, we have designed as part of that, of the tax reform, to make it more expensive and costly to evade your taxes. I'll give you two examples. If you buy this phone and you did not pay VAT on it, by the time you want to claim a deduction for corporate tax purposes, the system will reject it because this item is liable to VAT and VAT was not paid, it was in charge. If you imported it You have the incentive to under-declare so you don't pay the right amount of import duties. On the other hand, when you get to the FRS, you want to claim all the capital allowances and deductions, you overstate it. The systems are not speaking to themselves, you get away with that. Under the reform, that will no longer be possible. In other words, we want to expand the ecosystem of who is paying taxes. By the way, this is a conversation that is much beyond generating revenue. It's about creating a level playing field. If you are the good guy, we're operating in the same sector, you pay your taxes, I'm not paying my taxes, I'm getting away with it. You know what? I have between 30 to 40% to play around with. If I don't like your face, I'll price you out of the market, I will dominate the market, and I'm the bad guy. We should not create that system. So these reforms are also trying to address that.
Fantastic. Rashad, you were nodding your head enthusiastically. Are there any other pain points that
You
that
can
businesses
imagine. I mean, Taiwo just talks about people becoming intentionally misaligned with the right figures, but it's the time and the effort and the multiplicity of people that come and visit you. In companies, you have to put in place huge teams. You have to have tax advisors. You have to have the good guys. You have to have the hard ones, depending on which type of regulator or tax person you are dealing with, because they're the really ones who needs to be really well touched up and educated, and they need to go low down in some instances. So it's very painful for us. It's expensive, and it's not encouraging. And some companies, imagine for large corporates as well, where we seem to be the target, because people expect that you just declared your quarterly return figures on the stock exchange. Oh yeah, we need to collect some of that. Like, is it available for collection? I mean, there's a reason why we're all in business here. We have everyone else involved. So we're not seeing that extending to certain people, as you say, depending on whether they're in gray area or in the light or even in the dark in the sector. We also tend to see this question around interpretation of tax laws by whoever comes to visit you. So they can interpret something that was already reviewed years back and charge you. And then they'll tell you it's MPR. MPR today is 27%. Maybe this time then was maybe 12 or 11%. And you're going to be charged on that, not because you intentionally try to do that, but it's a matter of interpretation. And in the end, companies just want to be compliant. We need the clearances. We need it for business. We need to do things. So one way or the other, you find a way to find a compromise situation. And it's very painful for all of us. We also think the point on enforcement, we can't wait for these things to come up, but enforcement can be done easier. We're looking for things like the TIN number for people, for vendors. It's really difficult. Imagine if TIN number was easy to validate the way you could do a BVN and your NIN. We still don't have that level of transparency and information. And yes, we're told you can just call someone, you can book and go and speak to ombudsman, but that itself is not as encouraging, because in the end, you might feel that there is more punitive nature. So people in the end keep some money to try and take care of whatever extra is going to come forward or not. So I think transparency, digitizing certain things, making it a lot easier, simplifying. We're all looking forward to this elimination of 50 types of different taxes that we're paying. But I'm not sure we're fully aligned on the SME side. On the SME side, there's still some things missing, and this is really where it will be great to see some more actions. I think I love the fact that we have lower, we've raised the threshold, so lower taxes, so perhaps a much more incentive, but we're still going to struggle a little bit, I think, until things are being implemented fully.
All right, so as it's been said, it's a marathon, not a sprint. Ajima, let me come to you. Should Nigeria be mandating a annual tax payment report from companies?
Well, it comes back to what Taiwo and Rashidat have also been saying in terms of creating a level playing field and introducing more transparency. And we've seen this happen in Europe, for example, where there's been a mandate to publish your tax figures. Tax transparency is a big thing in some European countries now. And what then happens is that it gives an incentive to companies to actually disclose their level of tax compliance, also their contribution to the national economy in which they operate. And so you have people voluntarily providing that information at the same time as they publish their financials. And so the public can see, and you can decide if you want to put your money, invest or buy stock of an ethical company that's also contributing to national development, or if you want to give your money to cowboys, as we speak. So it's one more lever along the road to transparency and creating a fair playing ground for all operators to operate. And I'll just add onto that one more idea around what both Taiwo and Rashidat have spoken to, which is the path to digitalization. Because if you think through it, since 2019, when the journey of tax reform started actively in Nigeria, there's been a progressive movement towards infusing digital ideas into the tax reporting framework. And if you track it, 7, 8 years ago, annual tax collection used to be around 4 trillion, 5 trillion, 6 trillion. I remember when FRS achieved 6 trillion, we were all popping champagne in Abuja. Oh, we hit 6 trillion. Guess what? 2024, FRS achieved 21 trillion on song. So it tells you that simply introducing technology into the protocols for administering tax, which also makes things more transparent, reduces areas for judgment and for the kind of interpretative disputes that Rashad mentioned, that path is one that leads ultimately to a much more efficient and effective system. And I'd like to encourage the committee to also take steps to crystallizing that a bit more in the tax framework, because our tax framework currently is still around the self-assessment stage. We all have to assess ourselves. But Taiwo was mentioning the fact that some of this information can be preloaded. And in a sense, as you're about to fill your return, the system can tell you already what element of your tax return should be. Now, that's moving away from self-assessment into sometimes mandating it. So that has to be harmonized, and that's the direction of travel.
Yeah,
You've praised Rwanda a lot on this, right?
Yes.
Okay, you want to talk about the tech?
Yeah, no, indeed. So very valid point. So in fact, if you look at the tax bills carefully, you see we've been very intentional in the direction of travel with technology. So first, for example, we have tax ID. So you know TIN. And the tax ID has a definition such that, in fact, this would be as simple as asking for somebody's mobile phone to know their tax ID. Because your mobile phone is unique, right? And it can be linked to your NIN, and NIN is linked to everything else. Mm-hmm. So it will be easy for you to validate. The other thing is, in the whole system of who should I audit, what we're doing now is just throwing stuff in the dark and hope we catch 1 or 2 people, right? The taxman comes to you not knowing what to ask. They have a standard list that sometimes looks very, extensive, like using a hammer to kill a fly. We're going to be doing what we call risk-based audits. So you buy this phone from me and you overstated it. It's linked to the person that sold to you. If the person has not overstated their sales, the system will flag it. So that's the person I will audit. So that will mean that the pressure will be less on corporates like Rashida's businesses trying to do the right thing. So the other important point is we're also doing an intelligence thing that connects everything together. So the self-assessment that Jibola mentioned is still there, but we also have included the definition somewhere, almost like an assisted self-declaration. So each time I go to the mall, each time I make a call, each time I buy a car, I register with the state, I build a house, I have to connect with electricity. So there's data points. So we are linking that data points together. You have a property, you collect rent, the rent goes to your bank account, the system picks it. So before you submit your return, it's pre-populated with that data. If you choose to ignore it, you have to then justify why you have more compelling data than the one on the system, which you must prove. So we think all of this will help us, on one hand, to determine who is it that is poor and needs to be exempted from paying taxes. Small businesses, who is small business? People say, oh, people will lie that all their businesses are small. I said, the system will find out. Because you're not selling to yourself, they're third parties. We do third-party validation. So we know who is poor, who is small, so they can be exempted. And we know who is not so poor, so they can pay their taxes.
Look, I want to round off with that, and I'll end with you. So many more questions, though. So around the debate around reducing corporate income tax and raising VAT, some say, well, corporations will pass that on to shareholders, a minute figure. Meanwhile, VAT would be, technically increased across everyone. So where do you fall on that, on some of the pushback there?
So this has been one of the most difficult to explain. It's painful, honestly, that I think there are people who understand it and they refuse to demonstrate that they understand it. For VAT, And I hope nobody will misinterpret what I'm saying now to mean that we are rejecting what the governors asked us to do. We are not rejecting it. I'm just explaining in response to your question. So we said, what is it that people are consuming, particularly the low-income earners and the poorest people that are in multidimensional poverty? And they spend nearly 100% of their household income on food, on health, on education, on rent, and on transportation. And the plan was remove VAT from all of this. In fact, for many of that, will be zero rated. More than 60% of the consumption will be zero VAT. What zero VAT means is there's no VAT on the product, and the person producing it, if they had to pay VAT on anything, they will get the money back from the government. That's significant reduction in prices of those items. And then the rest of us, there are things, there's a pattern of consumption. If you use your phone, for example, a very poor person in Nigeria will barely spend 200 naira in a month. Most of the time, they are flashing you. You answer them when you get so angry, right? Yes. You'll be angry with them, but at least you listen to them and they'll speak. Yeah. So if they have to pay higher VAT, that's another 20 naira a month. It's painful, but then they're reducing VAT on many things. The rest of us who spend 50,000, 100,000 on the phone are the ones who will bear the brunt of that higher VAT. So it's meant to be progressive. In fact, businesses under the reform will get full credit for any VAT they pay on services, on assets, and on inventory. There's nothing to pass to anyone. Because in fact, today, many businesses have to bear their VAT, so which they build into their costs and they charge it to their customers. Under the reform, they will get the VAT back. There's nothing to pass. In fact, manufacturers have over 1.5 trillion of unsold inventory. What we expect rationally will happen is they get a reduction in their cost, they'll pass it on to their customers so they can sell their inventory. But many people have refused to understand it. They said it will stoke inflation, Nigeria will do this and do that. The governor said, I agree with them.
I could continue this conversation for another hour, but we've run out of time. Very informative. Mr. Taiwo Ilwe, Rashidat Adebisi, Adiba Olomola, thank you so much for this fantastic conversation on taxes. Really appreciate it.
Thank you.
All right, after the break, the conversation continues on. I wish I was doing the next one, but Boston is doing it. Power, electricity. The lights haven't gone up since we started, which is great. It is, of course, KPMG Arise News, Budget Day 2025. We'll be back after the break. Stay tuned.